You can read the manufacturing question.
Question 4. The following is the trial balance of All Shall Pass Promax Limited, manufacturers of high school for the year ending December 31st, 2023. Office assets at cost, factory assets at cost, motor vehicle, loan, raw material at January 1st, 2023, indirect material at January 1st, 2023, work in progress at January 1st, 2023, capital, retained earnings, sales, rent expense, general factory expense, direct wages. Can you please scroll up? Please, can you please scroll up? Direct wages.
Pull up. Have you gotten to?
Yeah. Direct wages. Purchases of raw material. Purchases of indirect materials. Direct expenses. Indirect factory wages. Bad debts. Provision for unrealized profit. Carriage inwards of raw materials. Office expense. Commission received. Trade receivables. Bank. Please go. Trade payables, dividend, finished goods at January 1st, 2023. Additional notes. Closing inventory, raw material, Ghana cedis 20 million. Indirect material, 12,500,000 Ghana cedis. Work in progress, 11,250,000 Ghana cedis, and finished goods, 30 million. Goods B, goods produced are transferred at a markup of 10%. C, provide for depreciation as follows: factory assets 10%, office assets 5%, motor vehicles, I think 10% on. I don't know. Motor vehicles, I can't see the figure, but note. The motor vehicle is used equally at the factory and office. The rent expense is to be apportioned 70% in the factory and 30% in the office. E. Provision for doubtful debts is to be maintained at 10% of the account receivables. You are required to prepare the manufacturing accounts, income statement of the year, as well as the statement of financial position as at year end.
All right. So yes, you are required to prepare the manufacturing. Take note of the requirement, right? Take note of the requirement given in the question. So manufacturing. So we start with the name of the book of the entity. Even if you don't know anything, just write the name of the entity. You get tick for that. You get tick for that. All right. So what's the name of the entity?
All Shall Pass Promax Limited.
All Shall Pass Promax Limited. All Shall Pass Promax Limited. Okay. So now there we come in, right? Manufacturing account for the year ended. Manufacturing. What? Let me see. Did he join the trading? Manufacturing and trading. Okay, so manufacturing account, income account for the year ended. Income statement for the year ended, as well as the statement of financial position. All right. So we can see manufacturing account. We can separate them. So manufacturing account for the year ended. Then we come and do the trading or the income statement for the year ended. What is the date? Is it 31st? The 1st December 2023. And the
31st December
2023. All right. So manufacturing account. The manufacturing account is in the what? It's in the factory, right? In the factory, we produce goods. So this entity is a manufacturing entity whereby they produce the goods before they will sell it, right? They will produce the goods themselves, right? Okay. So with the manufacturing account, we will be looking at what? The cost, right? We'll be looking at the prime cost. So the prime cost consists of the what? The direct cost. The direct what? Cost. The indirect cost, no, the direct cost, the direct labor, and then the direct what? Expenses. Direct cost, prime cost is equal to what? The direct cost.
Material cost. Direct labor cost and direct expenses.
Direct labor or wages. Direct labor or wages, and then the plus direct what? Expenses. So this is the prime cost, right? This is the prime cost. Then we come to the factory cost or the indirect cost or the factory overheads. So let's look at the prime cost. Let's use the question to get the figures. So these are the things that we need. We need the prime cost. And you're going to sum up all the what? The direct cost, the direct labor, direct expense. Usually it is the direct cost that is plenty. The direct labor is 1. Direct labor is 1. Usually they give 1. But you can't even get more than 2. Usually the direct labor. And then the direct expense to sometimes, yes, usually because of the nature of the question, they will not give you plenty items under them. So it is the direct cost that they give you plenty items, right? Okay. So prime cost is direct cost plus the direct. So everything is direct, right? Then we come to the indirect. So let's start with the direct cost. Let's start with the direct cost. The direct cost. Direct cost, we are going to look at the direct
raw material,
right? Or the raw material, direct raw materials.
And
direct materials.
stock purchases and
right. Hey, did I say that the prime cost? So the prime cost, let me break it again. Let me say it again before. The prime cost is equal to what? The direct material or the raw material. Direct material plus what? The direct labor or wages plus the direct what? Expenses. Right? So that is the direct cost. It is the direct material or the raw material, direct raw material, direct labor, and the direct expense, right? So the direct cost is like the total cost, right? Which is also like the prime cost. So let's all right. So the direct material, we are taking them one by one. Let's start with the direct material. So the direct materials, we are going to look at the raw materials used in the production. So what are the raw materials? Let's go to the raw materials. From the question, you'll be given raw materials. What are the raw materials? So we have, you see, when you are preparing the, friend is saying, cost of goods sold and cost of sales. So you start with opening inventory, right? You remember that opening inventory, add purchases of this and that. Then what do? Add carriage in, right? So we are going to apply the same assumption here, right? We are going to apply the same assumption here. Cost of sales, opening inventory, the inventory that you were not able to sell from the previous year. So the raw materials that you were not able to use, right? The raw material that you were not able to use. You use tomatoes in preparing your stew. And not tomatoes na you are going to start with that. That is the opening word, opening raw material. So at this point, I believe you know the format. Yes, I believe you should know the format. So I have to just quickly solve the question and then, right? Because tomorrow is the paper. I'm not sure anyone is here that doesn't know the format by this time. So opening inventory. Opening inventory. So what is the opening inventory?
15,000.
Raw materials. So let's have a currency. So it's the Ghanaian cedi, right? And there are 8 zeros at the top. Someone is yawning.
Very necessary.
Okay. So opening inventory. What the opening inventory? Is it 15,000, right? Hey. 15,000. That's the opening inventory. You are going to add what? Add purchases of raw materials. What's the purchase of raw materials? Purchases of raw materials. That is 62,000.
62,500.
So please, when you have a question like this, it's prudent to mention the items one by one, like the lady did. What I said. So that when you are picking the item, you're like, oh, but I remember mentioning this item, so it should be part of the question. So it's prudent that you don't just start you don't just start solving the question. You read the items like office asset at cost, factory asset at cost, motor vehicle, loan, raw materials. Mention it to the end without the figures, right? So that you'll be like, oh, I saw this word somewhere. Maybe when they are looking for a particular item, like I remember mentioning it, right? That will also help you, a strategy to help you. Someone was saying something.
Please, so like the format, the signs, the Ghana cedis, the 3 signs, like can they? How do I know how do I know? I know the 3 signs. Can I use just 2 signs?
Can you use what?
Just 2 signs.
Just 2 signs.
So like just 2 Ghana cedis instead of 3 Ghana cedis.
Okay. So you use 3. Usually you use 3, but this one I do know what I want to do. I want to separate the manufacturing account. Then when I'm done, I'll come and prepare income statement. Then when I'm done, I'll come and prepare statement of financial position. So I'm doing it. So the two Ghana cedis will be good for that. But if I'm doing everything together, like the income and the manufacturing together, usually sometimes some people do the manufacturing and the income statement together as one.
It's so confusing like that.
Sorry? Okay. So then let's continue. What will be the next item? Add what?
Carriage of raw materials.
Do you have any carriage? Yeah, carriage of raw materials. Right? Can you see that?
No.
Add carriage in what? carriage
Okay, 3,000.
3,000.
3,000.
3,000. Manufacturing is simple, but it's plenty. The only thing. Okay. What else? Is there any return outwards of raw materials? Return outwards of raw materials.
No.
Return outwards. There's no return outwards. Okay, so there's no return outwards, right?
Yes, please.
Okay. So then this will become
So if there's no return outwards, you don't bring it. But if there's return outwards, you bring it.
Yes, please. So what's the name for this? Cost of what?
Cost of raw materials available for sale.
For production, cost of raw materials
Available for use.
Available for production.
Really?
Or use. Yes. Cost of raw materials available for production or for use. Yes. So what will be the figure? Please punch it very fast.
So it's 80,500.
80,500. Okay. So
where is it?
After you add the
Will you add the opening, the purchases, and then the carriage?
Anyways.
Okay. To get your cost of raw materials available for you.
For production or use. Okay. So now that you have gotten this, what's the next item? You less your what?
Closing inventory.
Exactly. So closing inventory or stock. Here, what are they doing?
Raw materials.
Are they using inventory or stock? Inventory of what? Raw material. So what is the closing inventory? It is the date that will tell you. You see the opening inventory?
Yeah.
We had January 2023. Raw material, January. So this one, it will be raw material at the end. Usually it's in the additional information.
Yes.
Is in the additional information?
Yes, please.
What's that
20
about?
million. 20 million.
So the 20 million, remember that we in our Ghana city we are having 3 zeros at the top. So we just do 20.
So it would be 60,500.
60,500. So what is the name given to this?
Cost of raw materials available for sale.
No, cost of raw materials for sale. Cost of raw materials used.
Cost of raw materials used. Okay. See, I don't like any total direct material. What I say? Then what else? Now I'm done with the direct material. What is the next item? Direct what?
Labor.
Labor or wages. Direct labor.
Please, can you decide not to add the 3 zeros on top?
Yes, but then your figures will be too long, and that can confuse you.
So what if the figures are not too long?
Then you can decide not to do that. But please be careful of this amount. Sometimes some people, because of the pressure in the exam room, they will pick the 20 million and come and deduct it from this amount. You see, all the zeros. Not that this one there is no 3 zeros at the top, so therefore they are bringing the full amount. But the figures here, it means there are 3 zeros at the top. So be careful about this. Sometimes it confuses people. So what is the direct What will be the direct labor or wages? Did you see any direct labor or wages?
Yes. 25,000.
Direct wages. Can you all see that? Direct wages, 25,000.
Yes.
Manufacturing is very simple. And then direct what? Expenses. Can you see direct expenses?
Yes, it's 10,000.
Thank you.
10,000. Counting there. If I'm going to write accounting today, I'm not going there to balance it. Sure, examination rule. I did that for my exams. I wanted to balance everything. It came, I had a B plus. Why? Because I wasted so much time on particular question. Because of that, advise my students don't balance. And those that I advise, they come with, and they get an A. The results come, they get A. Just try and do something. Catch the figures there and then go away. I've learned my lesson. So if you add all the three, what are you getting? That will be the prime cost.
$95,500.
I can bring the 95,500 here. To 95,500.
Is that the last sign? Or the second sign? Is that the last sign or the...
I'm using two currencies. You see, I'm separating the manufacturing from the income statement or the trading account.
And so if you are separating, you use two currency.
Yes, if you are separating it, you can use two currency. I don't want you can do it together and then use the currency. The currency is just about your arrangement. I think I'm using three currency, I would have just but anyway, anyhow you do it, just make sure your figures are precise. So now I'm done with direct what cost, right?
You see, I said I'm what do you mean?
I'm done with the direct.
5.
Guys, do you know that the total cost is equal to what? Direct cost plus indirect cost, right? And the direct cost, that's why we have the direct material, the direct labor, and the direct expense, which gives us the prime cost, right? Prime cost. Now we are coming to the indirect cost. So we have done the direct cost. What is it? So let's come to the indirect cost.
Oh.
So the indirect costs, what are the indirect costs? Anything factory. Someone is busy.
Factory wages is 41,250.
So factory overheads. The indirect costs are also known as what? Factory overheads. So anything factory, except one. Anything factory would come here except what? One.
So except what?
Except one. And when we get there, I will show you the one. Okay, so now, what are the factory overheads? That one you can have opening inventory of indirect materials, right?
Yes.
Yes. So what are the opening inventory of indirect materials? Can you see direct material?
17,500.
Okay, so opening inventory of indirect material. So what will be the indirect material?
17,500.
17,500. All right.
Purchases
of indirect materials.
Purchases of indirect material. So what is the
30,000.
What else? Do you have return invoice for that? No. Right? Do you have return invoice?
No.
You don't have to make the list. Okay. So we are adding the two. You add the two. What are you getting?
47,500.
All right. So what will be the name for that? Cost of what?
Indirect materials available for use.
Cost of indirect material available for production or use. Anyhow, that will be how much? 47,500. Okay. So what do we do?
Add it to the farm cost.
We add it to the what?
The prime cost.
Do you have any closing inventory of indirect material? Closing inventory. Additional information.
Yeah.
Yes, please.
So, direct material. Less closing inventory of indirect material. What is the closing inventory of indirect material?
12,500. It's 12,000. It's 12,500,000.
12,500. I mean, we are ignoring the treasures.
The video is there to confuse me.
So you see, like use your pen or pencil to cancel the 3 zeros because all the figures you are writing they have 3 zeros at the top. So if you bring the 12.5 million again, you are on your own. All right. So what are we getting?
35,000.
35,000. I'm sure the figures you are giving me are correct. Balance will be. So what the name? Now what indirect? Total indirect material. Then what else? Anything factory. Come here. Anything factory. So what do we have?
Factory expense.
Factory what?
General factory expenses.
Okay. So can you see the factory expenses? Yeah. Let's start from the top. Where is the factory? So usually when you're picking, start from the top. Where is the factory? General factory what? Expenses, right?
37,500.
I can be deep. Ghana Suera. 2007.
So that's how much?
That was my last number. Oh, but once
General factory expenses is how much? 37.
37,500.
What else?
So please, you have to adjust the rent expense.
You have to adjust.
70% of the rent expense goes to factory.
Okay, rent expense is what? 25,000. Any additional information on that? You look at additional information. Goods are produced, markup, blah blah. Price depreciation, factory asset, 10%. Blah blah. Motor vehicle is equally used in the factory. Okay, so motor vehicle is equally used in the factory as well as the office. All right. Then the rent expense is to be apportioned 70% in the factory and 30% in the office. Okay. So let's adjust the rent expense and also the motor vehicle. Motor vehicle is equally used. So here you have to be careful with additional information. And this question is in the slides, right?
Yeah.
Yes, this question is in the slide. So if you solve the tutorial set, you should be able to do it. It means they had it for this we solved this. If so far as it's in the tutorial set, it means we've done it. So tutorial set questions, sometimes you have to go through them. That is why throughout I've been using tutorial set. Because I don't really like math questions. Now they have been bringing future questions a lot. Okay, so now let's adjust our rent expense. And I think they said something about factory assets. The factory asset is that it was used equally. Motor vehicle. Yeah. Where is the motor vehicle?
Motor vehicle was 87,500.
And they said it was what? It was used equally. So now this depreciation they are talking about. Provide for depreciation. Oh, okay. So that's talking about depreciation. That's talking about depreciation. Yeah. Let's do the rent. Rent expense. Rent expense is what? Adjusted 70%. So 70%
of 25,000.
20%. And that is giving us how much?
17,500.
17,500. What else?
Indirect factory wages.
So we are done with rent expense. Anything factory. The indirect factory wages. Indirect
factory wages.
Is how much?
41,250.
And what else?
The depreciation.
Depreciation? Alright, so then, okay, the depreciation. Alright, so the depreciation will be what? So giving depreciation afterwards, let's come to the question. Depreciation. Provide depreciation on factory assets. Yes, factory assets is how much?
10% of 100,000.
So factory assets is 10%. So 10% of the 100,000 will give us what?
10,000.
10,000. Then what else? The office assets.
The motor vehicle. Okay, office assets.
Office assets is in the office. Office assets is in the trading. You get it? If you don't get it,
Forget about it.
the motor vehicle is use equal to half of what was used half in the what factory and then half will go to the office trading the income statement. Let's look at the amount. What is the amount?
87,500.
87,500. 87,500. 87,500. So what did that giving us?
43,750.
43,750. Right. What else?
So aren't you supposed to use the 10% on the motor vehicle before you divide it?
Which one are you talking about?
The additional notes, the number C.
C. Okay.
So the motor vehicle, wouldn't you use a 10% on it before you divide it in equally?
No. Did they give 80% on the motor vehicle?
Yes.
What percentage did they give? Motor vehicle
10%.
10% on cost. The motor vehicle is used equally in the factory and then what?
The office.
Okay. Because 87 is the cost, right? But we are talking about the depreciation. Okay, good. Thank you very much. It's times 10%.
Yes.
Depreciation.
Times 10% is giving us what?
$800. Wait. 4,375.
How possible?
But what figure did you give me the first time?
Wait, sir, am I supposed to? I was giving you the 10% on 800 and 10% on 875, 87,500, and then half.
And now, okay, so 10% will be 8,750, right?
Yes, and then if the half, that is the 4,300.
Good, let's go. What else? Any other factory item? Any other factory item? No. Admin. So quickly. What will be the total factory? What will be the total factory overhead?
Sir, please, is 145,625.
$145,000.
45,000.
45,000.
625.
625. Okay. 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 So now we are adding all the costs. Direct cost plus indirect cost. What would be the total?
241,000.
Adding it to this one, the prime cost.
Yes.
95,000. What I get?
241,125.
And
the word is.
you come on, a group and
So then I would say
cost of production. What is the cost of production? Yes. This is our cost of production, right? So then we make that adjustment. So what is the adjustment to that? Work in progress. Do we add work in progress at the beginning? Or
Yes.
we did that?
We add the opening work in progress and the closing.
And let's closing work in progress.
Add opening work in progress. What is the opening work in progress? Given in the question.
6,250.
Where is it? Where the work in progress? Work in progress.
Is on the at the top.
So work in progress at the beginning. So 6250. We come here. 6250. So let's just 6250. That's what?
Closing work in progress.
The closing work in progress.
11,250.
Additional information. Missing will be additional information. Is it?
Yes.
11 what? 250.
Yes.
What I get it to be a negative figure.
Yeah.
Even if you bring the whole thing here, it's also not a problem. At the end of the day, you can decide to make it money. Bring the whole thing here. Yeah. What I get it.
For the cost of goods produced.
Mm-hmm.
$236,125.
I want to figure out this one. 6,250 minus 11,250. What I get it?
Minus 5,000.
So deduct 5,000. 2141. What I get it?
236,125.
Minus
100 and what?
25.
240,100.
Mm-hmm.
What is my
These are cost of goods produced.
total cost of production?
The total cost of production. So just leave it like that. What else? Do you have any manufacturing profit?
Yes.
Yeah.
So what will lead to a manufacturing profit?
Step if I didn't.
What will lead to a manufacturing profit?
A markup value.
Exactly. And when no. When no. Don't have any. The one who said backup, who is that? Is it Akosia?
Step is yes.
Ah,
Step is no.
so what is the formula for getting the profit when there is a markup?
Step is
Percentage over 100+%. P%.
How do we get the
cost
manufacturing profit?
10% of the cost.
Okay, so 1% of what? Of the cost. Okay. The cost is how much? How much is the cost?
136,125.
236,125. So what are we getting? 10%? That's how much?
So if we are getting 259,737.5.
Hey, come again.
259,737.5.
259.
please.
1,700.
620.
10% of this amount, you are getting a figure which is more than the amount is.
23,612.5.
23.
1,612.5.
612.5.
612.5.
So please, I have a question.
Okay.
I'm
What is
trying
your
to
name?
get
Your question.
Okay, so what if you are given, maybe when they say cost plus
What is your name?
maybe
What is your
10%?
question?
My question is for you to help me with this part. If I'm given margin, if I'm given
What is your question?
okay,
If you sum the two, what are you getting? You are getting the market value, right?
Yes.
So give me the total market value.
259,730. 7.5.
300 and what?
37.5.
We are done with the manufacturing part. We move on to the next one, which is the income statement.
Income statement.
one, we can bring two currency, right? So the income statement here, we are done with the production, right? We are now coming to sell it, trade. We are now coming to sell it. Okay. So sales, I believe we know it. We start with sales, right? What is the sales figure?
Yes. Please.
400,000.
400,000.
The returning was
No.
less return. So, I think they will do this and still give you return. Less cost of sales. Opening inventory, right?
Yes.
Yes, please.
For finished goods. Inventory of finished goods. What is the opening inventory of finished goods?
24,000.
Yeah, please, I have a question.
Okay, your name and your question.
Rosalinda.
Okay.
Please, I want to know when we have to use that from when we are giving a markup, and then I saw it in the slides that we have to use we have to add the numerator to the denominator. Like, see this one, we're giving a markup of 10%. So we got something like 10 over 100 plus 10.
Markup is on the cost of production. So you see, in the question, I think when they give us margin, we will convert the margin to markup. They use the markup on the cost of production. You get it?
No, please.
Yeah, so this question, let me write note. Markup is on cost of production. Margin is on sales, right? So I think when they give us margin, we could have converted it. What you are saying is the conversion of the markup, the margin to the markup, right? We have conversion of margin to markup. So we will convert the margin to the markup and then use the markup for the cost of production, right? You said that it was what, 10% or what?
Yeah, 10%.
Yeah.
No. Yeah, 10%.
Or 10. 10 over what?
100 plus 10.
100 plus 10. Right?
Yes.
So that is converting the margin to the markup, right? Converting margin to markup and then conversion of markup to what? To margin.
So assuming
right.
The question is,
Mm-hmm.
so instead of the markup in the question, and then the question says that goods produced are transferred at a margin of 10%, are we supposed to convert it by using this approach before?
Mm-hmm. So conversion of, okay, so let me show you the conversion, how the conversion is like. So the conversion from markup to what? Margin. So if markup to margin, that's where you see 10 over what? 100 plus this. But then if it's from I think markup to margin, right?
Yeah.
Markup to margin. I think markup to margin, you rather did that. And then from margin to markup, margin to markup, 10 over 100 plus 10. So that's when you use to multiply the cost. So know that the markup is on the cost of production and the margin is on what's the name? On the sales, right? So you come again with your question, the later part.
Assuming the question states that goods produced are transferred at a margin of 10%.
Mm-hmm. Mm-hmm. At a margin of 10%.
Yes, please.
Okay, so we convert the margin to markup. So how do we convert margin to markup? Markup is equal to the margin over 100 minus margin. So margin is 10 over 100 minus 10. What are we getting?
Yes, please.
You are getting 10 over what? Is it 90?
90.
Yes, times the cost. What is the cost of action? 2, 3, 6,
7.
7. Oh, yeah. So you multiply right now.
480. Thank you.
Oh. Alright, so where have we got into?
We're about to start the income statement.
It's opening of finished goods. What would be the opening of finished goods? Opening of finished goods. 24,000. Can you see that? That's where you can see at the bottom. 24,000. So opening of finished goods 24,000. What else? And what? So we are not going to purchase. We have already produced the thing. What do we add?
Cost of production.
So we've gone beyond cost of production. We are now at market value.
Cost
Did you get
of
market value?
goods available for sale.
We have market. We are going to pick the market value. Assuming there was no manufacturing profit, we would have just picked the
Okay.
cost of would have paid the cost of production if there is no market value. There is market value. So what is the market value? 0.25 something.
737.5.
737.5. You add it, what you getting? That'll be your cost of goods available for sale.
283.737.5.
737.5. That's giving us the cost of goods available for sale. We are going to sell it. It is not for production. Get a difference. Okay. So then we go on to the next one, which is what we less our what closing
Stock.
inventory of what finished goods. Where is our finished goods?
30,000.
Closing additional 30,000. 30,000. Action is plenty. You see, we are doing about it. So let's enter the transaction. We enter. Who will be announced the time for a different question? They're going to do a different question. We are get to a point. See that the time we're going to do another question. you stop and go and that question. So you can time yourself. Me, usually when I send time, I don't really go with the time. Some of them they will say give yourself 30 minutes for a question, but then doesn't usually work for me. So I just try to be fast.
I'm charging.
All right. Okay, so if you did that, what are you getting? There is no wages. If there is wages, you have add. This will be our cost of goods sold. Then you add wages. So this will be the cost of sales since there is no wages to be added. Wages in the office. Wages in the office. So what are we getting? Hey, are you here?
Yes, please.
Yeah, so give me the figure. Deduct this from me. What I get it.
$53,737.5.
Is this princess? Is it princess?
No, please, Esther.
Okay. So 253.
737.5.
737.5. Okay. So that's the cost of sales. So what do we do with the cost of sales? So we'll get a gross profit. We'll get a gross profit and not a loss. Since the top one is it 4,400,000, of course, yeah. So what are we getting?
That's 146,262.5.
146, 200 and what?
62.5.
A gross profit. Is my reader here?
Yes.
Okay. When you are silent, are you tired?
Pardon?
Are you tired?
Yeah.
Tomorrow by this time you are done.
We are extremely tired.
That is after the first do the issuance of space.
Yes,
Who is that?
yes. Yeah.
Issuance of shares.
Yes, please. The one in the past question.
And it means you will not do ratio.
Yeah.
So do you have any other income?
Ratio should be the last.
Yes, of course, that is the last. From manufacturing, we do ratio.
Commission received.
But you have to revise on your own too. So you don't worry, I'll send the solution. So if you go to the solution, you don't understand, then you send it to the page. Someone will explain it to you. So any income, add other income. What other income do you have? You have provision for realized profit. So increase is an expense, decrease is an income. Aside that, I will talk of any income. Commission received is an income. Any other income? Okay. Okay, the manufacturing profit. The manufacturing profit. So how much is the commission? Commission is how much?
$5,500.
And the manufacturing profit. Oh yeah, it shall be well.
23,612.
612.5.
0.5.
What else? Is there any other income?
So there's decrease in provision.
So let's do the decrease in provision. All right. So provision, where's the provision amount? So we are giving provision for realized profit, 4,000. So let's do some workings here. It's not easy, but it is worth it. Right? Provision for, what is it? For realized profit. What's the provision for realized profit? Provision for realized profit. In the question is
4,000.
4,000. And then were we given additional notes to compute the one in the end?
Yeah.
So, all right. So provision for doubtful debt is to be increased.
So is it the same as the provision for doubtful debt?
No.
Hey, which one is that? Where's the provision for unrealized profit?
There's
Okay,
no
I think
additional notes for it.
Okay, but I think there will be a formula for computing that. There will be a formula for computing provision for unrealized profit at the end. So the one in the trial balance is what? It's given as 4,000.
4,000 CDs.
Yes, and the is it? Provision one.
Yes, down. Yeah, here, provision for realized profit.
It's 4,000.
Yes.
Mm-hmm. So where is that? You have to give information for us to compute at the end. So that we compare to know whether there is an increase or it is what? A decrease, right? Yeah, where you from? Okay. Okay, so it will be on the what? Finished goods. Let me check my phone. Let's do some adjustments.
So what?
All right, so according to the marking scheme, then you multiply them. Because what we know is to find unrealized profit, you would take the market value, the manufacturing profit over the what? Over the market value times the closing inventory. But according to the marketing scheme, they are saying take the closing inventory 30,000 times 30,000 minus 24,000 all over 24,000. And they are getting 7,500. I have not seen something like this before. So I would find out. But this is what they are saying that you do in the market scheme. So when you compare it, you are getting 3,500. So 3,500, that is resulting in an increase or a decrease?
A decrease.
A decrease? In the trial balance, it was 4,000. When we computed, we had 7,500. That is giving us an increase.
An increase, yeah.
So it's an increase. All right. So the increase will be an expense. The increase will be an expense. So if the increase is an expense, then we'll send it to the expense. So now that's all for the let's move to the expenses. Let's move to the expenses. Can I claim this?
Yeah.
I want to claim it to continue where you see. So in the examination, never think of balancing. You waste your time. And if you joke, you do not get your grade. For some of the transactions, it's weird. I remember last year I was having a question during intervention, and at the end, the capital account was supposed to be 120,000, but in the question it was 100,000. So we finished everything, and then we had a difference of 20,000. It didn't balance. Before I checked, and I realized that there was an error of 20,000. The figure was supposed to be 120. We do go with time examination, unbalancing, so what's wrong with time? So that's why I keep saying accounts is just senior team. You don't focus your mind on balancing. What is the expenses? What are the expenses that we can talk of? Let's do the expenses near the office assets, motor vehicle, rent expense. We have the rent expense here.
There's loan part.
Loan is not an expense. Loan is under the statement of financial position.
Bad debt.
I said the bad debt. The rent, under the additional information, they said that percentage will come to 70% when the 30% will come with here. 30% is 30% of 25,000. The 30% of 25,000 will give us what?
$7,500.
7,500.
7,500. Then we come to the one is that. This one again. Any expense, any other expense, bad debt. So how much is the bad debt?
3,750.
3,750. What else?
The piece office asset.
Office asset?
Depreciation of office assets.
Yeah, we've not gotten if that or depreciation will be our last thing.
Okay. So then provision for doubtful debt.
Provision for doubtful debt. Okay. So provision for doubtful debt, where is it?
So
So what about dividend?
Dividend. Where is dividend?
It's at the end of the trial balance on the second page.
Okay. So dividend. Dividend. Is dividend not supposed to be under finance? We pay dividend.
Of financial position.
Okay. We have paid dividend. Okay. And it's on the debit side. Okay. So we can see it as an expense. And treat it as an expense.
Yeah.
Okay. So expense. How much is it?
8,750.
Okay. What else? The increase and decrease in provision. We done that.
No.
So the increase, it was an increase. You said it's an increase in provision. The one that we don't know the way they had it, increase in provision. Because people market the function profit to market value, but they are getting a different answer. So let's do it and see whether it will balance. Okay. Provision is giving us what? 7,000 minus 4,000. That's giving us 3,500. What else? Yes. There is no space. Anyway. So I'm continuing under. What else? Is it depreciation?
Yeah.
What are the depreciation? Depreciation will be on what? Why is it? Depreciation. Depreciation asset. What is the rate? Office asset. 5%.
5%.
Office asset. 5%. 5% times what? What is the figure? 5% by
75,000.
And 75,000. So
Yeah.
75,000. What we have?
Three 750.
3750. What else?
The motor vehicle that we divided.
You just part to go here and then part to go there. Half of
Yeah.
the 387 and 97 something times 10%. Is it possible? Something is made. I'm going to do that. I'll start position.
Sabi, what did you say?
But what answer is it from the
I think we're using the same since it's equal.
yeah, so what are you getting?
4375.
375. What else? What else? What else?
So they said provision for doubtful debt is to be maintained at 10% of account receivables.
The provision for the provision for doubtful debt. In terms of account receivable. How much is the account receivable fee? Account receivable.
17,500.
Trade receivable. 17,000. The account receivable is the same as trade receivable. If you make a trade account, okay, anyway. So you want to. Okay, so that will be how much?
1,750.
1,700. What else? Is there any other? So that is it. Yeah, so that is it. And office expenses, did you see that?
Office expense. No.
Office expense. Office expense, 30,000. Did you bring that?
No.
You didn't bring office expense.
Yes.
Why should you bring it? Usually the depreciation is the last. So let me bring it here. Let me see that office expenses. How much is the office expense? 30,000. What else? Is that all here? Sum everything. Let's see what we are getting. is the total of the gross income.
It was 175,000.
Which one?
The gross income.
And what I get it.
175,000.
175.
375.
375. Did you just compute that?
No, I had already did. I done it already.
You solved the question already.
No, the time you were doing it, like you didn't write it, but I wrote.
Oh, okay. Okay. So give me the expenses.
So the total expenses is 63,375.
53,000. So 63,375. That's the total expenses.
Yeah.
We deduct it from it, I get it. To be a net profit.
The net profit is 112,000.
112,000. Punk.
Yeah.
You send to us for the. So we are done with the this one. Now we are going to prepare our statement of financial position. Okay. One question. What is in the application? Just enter your transactions and pull your pay. Okay. Then we're going to do which one again?
The statement of financial the ratio. Isn't the ratio after this one?
The ratio. Issuance of shares.
They're not going to do the statement of financial position. Yeah.
Yeah.
Lord have mercy.
So statement. You want to know? Huh. What are the rest? Are they tired? The teacher is here and you are tired. You've gone. Vim.
Be listening, don't judge.
No.
Okay. Vim. Teacher non try something is here and you are gone. Except you have solved it before. Okay. So what are the non-current assets? Non-current. The thing is plenty. What's the time? Maybe you will not solve the issues.
No, sir, let's do the ratio after
So
this
that,
one.
so that you do the ratios on the road. Since you are sharp guys. What is the non-current assets? What are the non-current assets? Office assets. So here we have cost, accumulated depreciation, net book value. It is what it is. motor vehicle. How much is the motor vehicle?
87,500.
What else? Factory asset.
So why didn't you write the office assets first?
Office asset. Is it?
Why did you start with the motor vehicle and you didn't start with the office assets?
Oh, okay. So sometimes you try to bring the one that is more liquid. Yes, see, if you have a land and equipment, see, you are supposed to start with the equipment first. Why? Because the land and equipment, it can last more than. But okay, so which one can last a lot?
Motor vehicle.
Motor vehicle can last. Factory asset at first. Office asset. Office asset and then the anyway, they don't really look at this and just do okay, let me start with whatever you. But with land and building, it is prudent to start with the land and building. It's prudent to.
Okay.
But that is the explanation that give that look at the one that will last for long. Land and building will last very much long before the rest. The one that will last the least, that will be the last one. So among the three, I can even start with factory assets.
Yeah.
Factory assets. Okay, let me start with my factory assets. I start with my office. Nation, the pressure was so you now that I've forward. Which one will pass which one? Okay. Motor vehicle is what 67 and this one is giving us office assets. Any depreciation?
Yeah.
Let's look at depreciation we get factory assets.
No. Hey. Yes, there's depreciation of factory assets.
What is it?
It was 10,000.
We did it in the manufacturing account, right?
Yes.
That's why we cannot see it here. That's why we cannot see it here. So 10,000. And then what of the motor vehicle?
Sir, it's 8,750 without the division.
So we are adding both of them, right?
Both halves, yes.
Yeah. So that was 8,000 what?
750.
8,750. What of the last one, which is the office asset?
The office asset was 3,750.
So what is the net book price?
For the factory assets is 90,000. Then motor vehicle is 78,750. And then the office assets is 71,250.
Okay, so what's the total? Don't waste your time to get the figures here. These figures that we need. We just need the figure for it to continue. So don't waste your time and do this. I mean, what is the total?
$240,000.
Mm-hmm. Is it a question who has been mentioning the figures now? I'm mentioning the question. Hey, hello. I'm mentioning the figures. Are you? Yeah. Okay, you mentioned figures. So inventory. The inventory, we can talk of the raw materials, the indirect materials, what else? The work in progress,
Finished goods.
the question, going to use the close additional information figures. So the raw materials, we're going to use raw material 20,000.
The raw materials was 20,000. Indirect material was 12,500.
Okay, so indirect material is how much? 12,500.
12,500.
Work in progress is how much?
11,250.
Finished goods
30,000.
right? Okay. So, is there any unrealized profit to be deducted here from the finished goods, right? We know that unrealized profit. So the unrealized profit that we computed, what did we get?
We had 7,500.
So we deduct it from that. The finished unrealized profit. Just in the finished goods. What else? And we can talk of trade, receivables. Trade receivables. Trade receivables 17. What else? Provision for doubtful debt we deducted from the trade receivables. Provision for doubtful debt, what was the amount?
$1,750.
$1,750.
Yeah.
Current asset we have. Bank, we have cash and
No, only bank.
bank. Bank is 1,000. What else? Our current asset. So go to not else what liability. Liability is what we have. We have trade payables. How much is the trade payables? Besides trade payables, do you have any other current liability?
No.
Okay. So trade payable is the only current liability. Is it? This one the total can come. So let's bring the trade payable. Trade payable is how much? 12,500.
Left together. Okay.
Says 132,000.
$2,000. Is it like 133,000?
Yes, please.
You figure out what I get with the working capital.
So that one is the current assets minus current liability is 111,500. So 111. Hey, 190.
Is it 111?
119.
$119,500.
Mm-hmm. This working capital. You add the working capital to the net asset. The non-current asset. What are you getting? I'll give us one of the balance sheet figures.
How
Which is
many times so? 10.5%. Okay. Bro, I have.
500.
I have.
what is the 2,000?
359,500.
Then we come to finance by we have capital. How much is the capital?
120,000.
Ew.
Add net. What is the net profit?
112,000.
Any drawings?
No.
Income surplus.
No.
Or retained earnings. Another name for income surplus is retained earnings.
Yeah, there's retained earnings.
So how much? Okay. How much is it?
30,000.
And retained earnings is 30,000. We need to start government funding now. 30,000 plus add long-term loan, right?
Yes.
You have loan. Okay. Add the loan. How much is the loan?
The loan is 97,500.
Mm-hmm. What else? What is it now?
Yes.
What are you getting?
359,500.
We are done with the manufacturing. So what should be the next one? Ratio. Ratio, do you think we can do? Let me. I don't think we can do the ratio now.
Yeah.
Maybe I can send you.